I'm not, all that positive at these points to get in for a new long position. So I think if you've gotten to it lower down, maybe 300, 320, I think if you're a trader, I think 350 odd is a good point to take some profit at least. I'm not trying to suggest that we have a negative breakdown or something, but again, it doesn't warrant a fresh buy at these levels. I'm not particularly bullish here. I think the stock will be more range bound between 340 to 370 in the next few months.
Okay. Would you have any sort of specific targets on the likes of other metal companies, Rahul? Tata Steel is quite dismal. That one's down around 25% on a year-to-date basis. And even say something like an NMDC?
Incidentally, Tata Steel has been a stock which has been an underperformer for quite a few days. And over the month, if you see the targets we identified on the stock was more towards 280 to 290. We're almost there. So again, it doesn't warrant fresh shorting at these levels. NMDC too, I don't think we have a vigorous downside from here. We think anywhere between 105 to 110 is reasonable support. So I think we're pretty much towards, a last leg fall, in my opinion. So I think at these points, we could be a tad bit, late to get in for a new short.
All right, Dipan, let's get your opinion on something like an Infosys. Now, the stock is a 1,000 rupee stock, so it's got a lot more liquidity post the corporate action that's effective from today. At around 990,000 rupees, would you play it?
No, not really. I think that we need better results to come out from not just Infosys but the entire large cap IT space. And I think that certainly this quarter and maybe next will benefit from slight rupee depreciation. But getting the volume growth is getting to be a bit of a challenge because of the environment there and the base effect at these companies. I think the best way to play IT would be through small, mid-sized IT companies. And maybe over the next 2-3 years, these companies will be outperforming, at least we feel outperforming the large cap IT companies in terms of returns that they can deliver to shareholders, purely because of their positioning and their niche offerings, as well as the base effect and smaller contracts, smaller acquisitions can make a big difference to the top line, bottom line.
Okay. Rahul, one last question from my side for you. Sun Pharma, that one is, top gain on the Nifty. Do you think that it could retrieve back to the levels over 1,000 rupees that it was trading at a few weeks ago?
Well, I don't think in the immediate rush it would, but 940 is where we think there's resistance on Sun Pharma, and a short-term move can take it up there.
Okay, and Dipan, what about you? What would your fundamental view on, say, the likes of Sun Pharma be? We had one of the guests talk about or compare the Sun Pharma space, or rather the pharmaceutical space, to a zoo, which means that there are all different kinds of pharmaceutical companies. Which one would your favorite be at this point?
Well, I think Sun Pharma, clearly the results were extremely disappointing and the management's explanation was not completely convincing. But it's a great company and, they've managed such ups and downs pretty well. So maybe give them a couple of quarters or so to come back, into solid growth phase. But you're right, I think, pharmaceutical companies are by and large very difficult to predict. And depending upon their, product approvals, depending upon the regulatory situation, the fortunes do, change quite dramatically. I think the best way to play the pharma would be to buy a basket of large and mid-cap pharma companies. And I think by and large that basket should easily outperform the Sensex, Nifty or some of the other mid-cap stocks. But I think going stock specific is a bit more challenging and requires a lot more in-depth understanding of the industry and the company.
All right, Dipan, so that's about the pharma basket. But let's talk about the high beta space. What about the infra stocks? Let's talk about something like an IRB infra. Not too leveraged if you look at it in terms of what's going on in the infra space. The results as well were quite good. Margins were improving over there. Would you buy it at around that 226? It's already corrected a good 20% from the top.
No, not really. I think that the infra space in India is extremely interest rate sensitive, and with the latest RBI policy and the way the G-Secs are trading at this point of time, I think that any kind of recovery in the infra space is just getting delayed. So I would just kind of avoid the entire infrastructure play at this point of time.
And what about cement stocks? You won't touch them either. I've been talking to a lot of dealers and they're saying demand is just not picking up. Every price increase is seeing a correction as well, and now we're heading to the monsoon. So do you think only you would look at them post the monsoon, or after that big correction we've seen so many of those stocks, 20-25% if I rightly remember, from that March 4th highs, we have seen a lot of correction, particularly the large cap stocks. Would you touch any of them?
No, it's not just the infrastructure. I think cement industry is being also impacted by the trends in the real estate industry, which are all not that positive, with kind of oversupply which is there and slowdown in construction. So I would say that cement companies also may remain under stress, and it's not that valuations there are at attractive levels. But cement, infrastructure, these are stories 2-3 years down the line. So one can never really be out and out negative on them. So one needs to keep a track of these companies, and at some point of time, they may turn out to be good investment ideas. But for the time being, I think investors are better off being focused on the safe sectors and focus on blue chips over there, companies which have low asset kind of model, and at the same time there's some visibility. No doubt these are expensive, but I think these are the safe places to be at this point of time. Having said that, the markets are looking a bit vulnerable and susceptible to further downside. So I think protecting the portfolio from further losses, that should be the top of the mind as far as investors are concerned.
Okay, disclosures, gentlemen. Dipan, I'll start with you.
I think we spoke about several companies, and we have investments and our clients may have investments in those companies, so it's fair to assume that our views may be biased to that extent.
All right, and Rahul?
I don't personally hold the stocks I just spoke about, but I would have recommended them.
Okay, gentlemen, thanks very much for joining in and giving us a technical as well as a fundamental perspective on the markets. The Nifty holding comfortably at this point at 8,000 levels, but let's see whether the intraday volatility emerges once European markets open. We'll take a break, but in fact we will discuss cues from the global space. We'll have Arnab, Managing Director of Trusted Sources, joining in on the other side.
TV 18, celebrating 15 years of leadership. Nifty Futures celebrates 15 years of trading futures. Did you know that Nifty 50 has moved up 5.5 times since the launch of the Nifty Index Futures? 1.4 billion contracts have been traded in the last 15 years. And its turnover is now worth 353 trillion rupees. Nifty Futures celebrates 15 years of trading futures. FOMC TV 18, celebrating 15 years of leadership.
Welcome back. Well, very quiet for the markets in terms of a range, but the mid-cap index is managing to lick some of its wounds from last week. So the mid-cap index is currently up around 0.6%, and we're holding up in terms of a good advanced decline ratio. So for all of 450 stocks declining, we have 855 stocks advancing. So the ratio stands at currently 2:1, and the gap is quite nice and wide at this point in time. But one of the key cues that we'll be waiting out for will be the European markets, which open at 12:30 p.m. and that might bring some volatility with it, considering that the IMF Greek talks did not see any sort of fundamental go through this weekend as well. To talk more about that, we have Arnab, Managing Director, Macro Strategy at Trusted Sources, joining in. Arnab, hi, good to see you in today. What is your sense in terms of what the future developments for Greece can be? We had some statements from, government officials from Greece saying that there won't be a Greek exit. But do you think that there's a likely chance of that, and what role is Germany going to play in this?
Well, I think the chance of a Grexit is rising by the day. Of course, that doesn't mean that it's a done deal, that there won't be a deal to keep Greece going and keep it in the Eurozone. Germany's role, of course, is and will continue to be pivotal. Along with the other core countries, Germany will be in the lead among the creditors, probably even more important than the IMF. I think, what's happening here is that this is a repeated bargaining game. Each round of it is going down to the wire. And, as many people are saying, this week is crucial because there's a Eurogroup meeting coming up, and indeed every day and every week is crucial. Really, I suspect that what we're looking at as the next real flashpoint is the end of June, when the payments to the IMF are due. And then, of course, it is possible that it will be delayed even beyond that, because there is this idea that the managing director of the IMF has another 30 days or so to tell the board when a country has not paid. So already Greece has sort of bundled its payments from the middle of June or early June to the end of June under a precedent by Zambia in the 1980s. So, it's all going down to the wire. And I think this is what we should continue to expect to happen, and indeed for each deadline to be somewhat delayed. Of course, there will come a point of no return when Greece will either have to default and may have to exit, or will have to come to the table with something that really works. Now, I think what this process is pointing to the chasm continuing to be quite wide. So I suspect that there's going to have to be a lot of movement on both sides. At least that's the signal from each side. There will have to be a lot of movement from both sides before there can be a compromise. And of course, Germany and the other creditor countries can't really afford to compromise too much, because that opens the door to moral hazard to other countries that may be unwilling to reform or may be willing to go backwards in reform if extremist parties come to power. And on the side of Greece, the government there, of course, has been elected on the platform that will roll back the reforms and not do all the fiscal adjustment. So there is a big gap. It will need to be closed if Greece is going to continue to stay in the euro, or at least avoid a default.
All right, point well taken. But the other big cue for this week itself is the FOMC meeting that's due. When are you factoring in a rate hike, and what really are you looking out for in terms of this meeting?
Well, I think there's, continue to be mixed signals in the data. The bottom line is that the data are improving in general, although there's some back and forth in it. The labor market data are improving, and there are some signs of wage growth. So to me, it sort of looks like September is still the time frame for the first rate hike. It also looks like, as many people have been saying, and as I think the consensus is, the market pricing is moving towards, that there will be not a very strong process of raising rates. The rate hikes will be very gradual and very limited in their scope. And indeed, that's why the dollar, although it hasn't weakened dramatically, hasn't continued or hasn't resumed the strong uptrend of earlier this year, parts of 2014. So I think, we're still looking at the U.S. being the first country out of the gates, but we're looking at a country which is going to be constrained in how fast it can raise rates by the somewhat tepid nature of the recovery, and also by the easing that's taking place in Japan and in Europe. with the UK sort of caught in the middle. So I think we're still in a relatively loose money environment, even though the Fed will start to tighten in September.
Okay. Arnab, the other cue or what global investors are talking about is that Saudi Arabia has opened its markets to foreign investors. How important is this development for us? Break it down for us. And what would it mean for, an Indian market investor? Will he take out money from India to invest in Saudi Arabia? How would it work? Would there be reallocation of assets?
Well, I think it is quite important. I think it shows that Saudi is trying to rejoin the world economy in a more complete way than mainly as an exporter of oil and an exporter of capital. It also wants to import capital. It probably also reflects the fact that the policy of continuing to pump oil at relatively low prices and continuing to run the budget and run the economy as if the price of oil hadn't collapsed by half, does show a certain need for foreign funds to come into the country. And I think that will encourage some reallocation of capital away from other quote-unquote emerging market countries. Saudi will be quite a large market and could be quite a deep and liquid one when this process gets underway and runs its course. And so there will be some reallocation. In the short term, I think, the reallocation that's really taken place that's been a bit of weight on the Indian market is maybe out of a portfolio shift out of Indian equities into Chinese equities, because China is another country that is trying to reform its economy and rebalance its economy, and indeed it is doing so. And it is also a country which, although its MSCI inclusion has been delayed, when and if that does occur, probably in a couple of years' time, it will be a much larger weight than other countries. So there are other countries, both Saudi, and China, and others as well, with which India will continue to compete, and perhaps that competition, as you're suggesting, will become stronger. So India will need to deliver more to attract the same degree of capital flows as it has in the past, and particularly on the reform front.
And quickly, Arnab, what is your view on India right now? Because we've seen FIIs pull out from equities as well as debt markets, especially in the month of May. Do you think that the FOMC uncertainty is possibly weighing on the Greek uncertainty? And if in case the uncertainty continues, but we have, say, a really good monsoon, which is despite what reports are indicating at this point, do you think that the interest would come back despite global uncertainty?
Well, I think there are several factors going on. One is the global uncertainty, as you say, and that's, of course, affecting every country. But there isn't a massive global contagion, unlike in the past when Brexit was on the horizon, because the Eurozone has done quite a lot to insulate itself from the contagion. And so the global spillovers, although they will occur, are not going to be systemic in nature. So there is a global effect from that. There's a global effect, as you say, from the uncertainty about the Fed. I think the main issues, though, are that India has underperformed on the reform front. It's underperformed relative to hope and expectations on the economy in terms of inflation falling, but also, which has happened, but also growth responding to the fall in inflation, to fall in commodity prices, and the cuts in interest rates, and the degree of reform that has taken place so far. So even India, although it's a large domestic economy, is also affected by the slowdown in the global economy. And it needs to do more, particularly if there were progress in the GST. That would send the signal that the tearing down of internal trade barriers within the Indian economy could regenerate a stronger domestic demand-led growth process in India itself, both consumption and investment, and then there could be a takeoff. But these things aren't happening yet, and I think that's the main reason why India is underperforming.